How to use the stochastic indicator. The stochastic indicator tells us about momentum and trend strength. The stochastic indicator uses a scale to measure the degree of change between prices for one closing period to predict if a trend would continue in its current direction. It uses two lines, and this is similar to the MACD lines, as one line is faster than the other. How do we use the stochastic indicator? The stochastic indicator tells us when the market is overbought or oversold. The stochastic indicator is scaled from 0, which is down here, to 100, which is up here. When the stochastic lines, which are the blue and red lines, when they are above 80, it means the market is overbought. And when the stochastic lines are below 20, it means the market is oversold. And so how do you use this knowledge? Well, when the market is overbought, we would sell. When the market is oversold, we would buy. We can use the two lines to profit, and we do this by waiting for crossovers. So when the faster line, in this case is the blue line, crosses over the slower line, which is the orange line, it produces a buy signal, and you buy when the market is oversold, providing a very, very good entry point. And as you can see, price went up after that point. And then looking at the sell opportunity, we can see a downwards crossover where the faster blue line crosses below the slower orange line. And this works best when the market is overbought. As you can see from this point right here, price started to come down. An important thing that you should know is that you should not blindly sell when the market is overbought, or blindly buy when the market is oversold. And this is because the stochastic lines can remain above 80 or below 20 for long periods of time. This is because the stochastic indicator does not show oversold or overbought prices. It shows momentum. And so if the stochastic lines are above 80, it means that the trend is strong, and not that it is overbought and likely to reverse. And this is because a high stochastic number means that the price is able to close near the top and is able to keep pushing higher. And so a trend occurs when the stochastic stays above 80. The stochastic indicators are very good for identifying trends because, as we said earlier, you'll see the crossover, then you'll see it leave the oversold area, and then as long as the blue line, which is the fast line, stays above the slower line, which is the orange line, you should stay in the position until the stochastic lines enter the overbought area. Divergences can be very important when it comes to using the stochastic indicator, as you should look for correlation when entering positions. As you can see, price was going high here, and so was the stochastic indicator. So when it started coming down and left the overbought area, this would have been a very good opportunity to enter a sell position, as the price also started to come down. So if you had entered a sell position roughly in this area right here, you could have made quite a lot of profit, as price did come down afterwards. Looking at another example, here we can see that price is starting to flatten out, and so is the stochastic indicator. So when the stochastic indicator left the oversold area, it would have been a good opportunity to enter a buy position, as this was an early indication of price rising, and afterwards it did. You can use the stochastic indicator with moving averages, as the moving averages can help you filter out bad signals. So how would you use it? Well, let's look at this example. The price is above the moving average. This is a sign of an uptrend. So where would we enter the position? You could enter a position here, buy here, and then you'd have confirmation here. But I would say that this is too risky. I personally do not like this positions here, these two positions. So what I would do is I would see that this is an uptrend, and I would wait for an opportunity to enter a trade in the direction of the moving averages, which is uptrend. So as I can see here, the price is staying above the moving average, and then it pulls back here, and it stays above the moving average. As you can see, it bounces off, and I can see here from the stochastic indicator that I went almost below the 20, which is here, into the oversold area. So this would be a good opportunity to enter a buy position. Thank you for watching. I hope you enjoyed the video. You should now be able to use the stochastic indicator properly. Please do like and subscribe. If you're working on something that you really care about, you don't have to be pushed. The vision pulls you.